Hey traders, welcome to, you know it, time to caffeinate and dominate. Happy Thursday, everybody. Great to see everyone. Thank you again for all the awesome feedback from yesterday's Q&A style webinar. Been getting great feedback from you all, and it's been awesome to know we can kind of do something a little bit more, something that says, hey, look, we've got a day trading class coming up. How is this going to help you, and how are the tools going to make a difference? So it was really great to have that sort of charts and coffee style conversation with you all. If you haven't caught it, let's say you missed it, by the way, you can check it out. Let's see. Yep, that's the class, but you can grab the replay over at simplertrading.com/answer-replay. Answer-replay. All right, so we're gearing up for that class on Saturday. Looking forward to seeing you, a lot of you there. Let's talk about what we've got this morning, though, before we get too far ahead of ourselves. What do we have this morning in terms of the schedule? Take a look. 10 a.m. Yesterday, Kapowell started probably about 15 minutes later than scheduled. It was a 9:30 schedule. About 15 minutes later, you'd start to see the volatility. 10 o'clock today, watching at the top of the clearing period, 10 a.m. Eastern. Powell starts day 2 of Humphrey Hawkins' testimony. You saw what happened yesterday. What was he able to do? What he did not do was ratchet up the hawkish rhetoric. What he did not do is spend a lot of time emphasizing headwinds and what's not working. He really did, I think, effectively, because you can see it in the price action. If I'm going to measure his effectiveness on behalf of the buyers, bulls, market rallied, and it seemed that he's communicating that the Federal Reserve has a handle on inflation and what their plans are. And I did not see any major shuffling up. Again, what we do should map to what we see, and I did not see any major shuffling up in terms of target rate probabilities and or even the dot plots, and what we know will then be the trajectory to the ultimate rate hike end game, right? What's the goal in terms of how many hikes we're going to get, where are we going to end up, and where are we at the halfway mark? We're not there yet. So when traders ask, is it time to start picking a bottom? No, we're not there yet. We want to really be on the latter half of that trajectory of rate hikes. So that's where we sit this morning. And in the meanwhile, and I've mentioned this to my mastery folks and the folks in the futures room, and that is, look, I am going to continue to wait for an end of month rebalancing rally, retracement, rip, call it whatever you want to call it. But until we get there, maybe we do, maybe we don't, right? Process over prediction. I'm not going to tell you we're going to 31.5. I don't know any more than I'm going to tell you we're going to 29.5. But if we get to 31.5, there are opportunities to play a trend following long puts or short sell. So it's not predicting where we're going, but rather what we want to do when we get there. Gang, the latter is trading. The former is the junk you do as clickbait or when you go on television, right? They're two very, very different ways of viewing the market. With that being said, of course, this show is about your questions. So let's go ahead and dive into them, starting off with Kevin. Hey there, Kevin. Good morning. Bonds and notes are approaching the short zone. Absolutely. Take a look at ZB. Take a look at ZN. We're there. We're there. But I don't trust this environment for swing trades. What do you think? Kevin, I don't trust this environment is exactly why, there's a number of things in terms of a class that I could do in summer. And I love summer classes. Things slow down. We've got the time to focus on education and indicators than being active in moving markets with better structure. And I'm with you. So when we don't trust, there's two choices. Well, three. There's three choices, and I'm with you. Go further out to a weekly and focus on longer time horizons where the near term mistrust really could then be sort of diluted by a larger trend and a longer term time frame based opportunity. In other words, you're going to give the market about 6 months to do what it needs to do, not 6 hours, not 6 days, not 6 weeks even, right? You can shorten the time frame. Mistrust. Well, what's a really easy way to handle mistrust? I just won't expect the same behavior from session to session or from week to week. I'll expect and I'll trade a window of maybe 2.5 hours. I'll look for organization in a very small window of time on a very short, say 5-minute time frame. That's another way to handle mistrust, and I'm with you. The other way to handle mistrust, and this is definitely something that we do in the mastery, this is definitely something I'm going to talk about this morning when I'm doing the open, is we can also scale in. We don't have to back the truck up at the 21 propulsion. We don't have to back the truck up at, say, 136.20 in the bottom line of the wave. We can scale in. We can also ask ourselves, what are alternative ways in lieu of, say, ZB futures to build a position in ZB with limited cost, and cost being a factor of risk, less risk. So those are all the things that I'm thinking about. And I do like the trajectory of higher rates to come, but I'm with you. I remember what happened in May. That stung, but it did allow us to put on some really great trades in IEF and TLT. And Kevin, I'll tell you straight up, it's time to scale back in, but let's do so. Again, another way to handle mistrust. This is what we call the holy grail in the Sector Secrets Mastery. Risk management and position size, that very unsexy part of trading. Everyone wants new secret squiggles and entries. I'm no different, right? But the part of trading that keeps us in the game for our career is risk management and position sizing. And I think that's what we have to deploy, or shorter term timeframes. Day trade the thing when we have a low degree of trust, because we know shenanigans are afoot. And I'm with you there on that one. Giancarlos, good morning. Can we take a look at NEO? Sure. Let's take a look there. So let's see. They're in a squeeze to the upside, performing well in this market. Well, think about where they're weighted or where they're not weighted, right, Giancarlos? These are not going to be tethered to the S&P. These are not going to be tethered to the heavily weighted sector. So they have the ability, of course, then to move without the S&P going along. So if you take a look at XPEV, right? Same conversation, but you all know me. I'm going to still tell you that structure, write this down somewhere, or I know some of you've committed this to memory already. Structure dictates strategy. Strategy dictates indicators. Most traders do that the absolute opposite way. I've got my favorite indicator, and what's the strategy based on that favorite indicator? And usually, if there's any acknowledgement of structure at all, it's not based on process. It's just based on, ooh, we went higher, right? So I know that is not the crew in this room. So let's stick with the proper order of processing what's happening. This is a significant move to the upside, no doubt, but it's happening in CHOP, where the preceding trend was down. We are still south of the equator. Let me give you an example of something similar. Here's Tesla. And a lot of folks ask, a couple in the rooms and also in the Charts and Coffee, hey, Rog, what do we do with that rip in Tesla? What did I say? We look to build possibly a short position in Tesla. We look to take advantage of movement lower. And as long as it's trading basically even below 745, we're good. I mean, we're going to open up at 715 this morning. So it's no different really in that regard. So no, I'm not going to start to buy let me type that in right. XPEV. I'm not ready to buy this environment. Now, having gone neutral, you might say, well, Rog, we're not in a downtrend anymore. Yes, but more points to exhaustion than heading higher. Now, ask me if we close above 32.50. We can start to look at different types of setups. But I'm not gonna, and even aside from that, look, I'm not gonna buy in the stream of moving higher. If someone bought fresh within the momentum, say a break of the Darvis at 27.60, that gives you a little bit of room to breathe. But I can't buy up here. But definitely worth keeping an eye on. You bet, for sure. All right, moving on to the next question. UNG and TLT. So we covered TLT. Let's take a look at natty gas. And anytime we have a futures contract that also has an ETF, we're going to go with the futures contract. This is still going to be Attilia. I don't have my distance glasses on. Attilia. Cool name. This is still going to be a situation where we have the information, what we know about the Freeport export terminal shutdown. How is that playing out? Are we still going to see that partial open in 90 days? And as that supply sits in the US, my suspicion is now having the 21-day expectation go out to 90, everyone's got low trust, right? And there's that old saying, right? When you kind of break trust, traders are not as willing to give the benefit of the doubt. Federal Reserve has been living that for years now. When you have a situation where 21 days turn into 90, a lot of traders are wondering, oh, great, when does 90 turn into 120? So you'll see they're not driving it down any lower because there hasn't been any ratcheting up of the supply narrative of, hey, that terminal is going to be shut down for longer. And it's only a partial opening at that. So I think this supply narrative sitting there, it's really tough to put a timeline on when we're going to resume the uptrend or when we're going to resume a bounce off this oversold low, which is what I would say technically is merited. So if at least we wait for the transition on my sector secret slow stow to go from red to green, we're down at the 20. Let's get the cross. Those of you that are using a traditional slow stochastic, let's get at least a cross before we start thinking about moving higher. Let's maybe get the confirmation of a minor low breakout. So it's a very, very early opportunity to grab some momentum. That would be what I would wait for. So thank you for the question. Good stuff. All right, moving on. Hey there, Jack. Thank you for all the education you provide. I appreciate that, Jack. I think a lot of folks, look, I think all of us here who are, on the mic with you all here at Simpler, we have a desire to share what we know with traders. One, we enjoy it. Two, I was thinking, what we want to be as traders on this side of the mic are the traders and the mentors we either had. I was very lucky to have amazing mentors, or the mentors we wish we had, and to be that to traders who are where we were, maybe years ago. So yeah, we love it. You don't do this unless you really love to trade in a fishbowl, because it's not always fun, right? And the feedback's not always great. So I appreciate that, Jack. It definitely reminds me that there are people out there who want to put in the effort, and when they have time to pick the brain of someone who's maybe, I don't even want to say a professional trader or all these other platitudes. I've just made dumber and bigger mistakes for longer to get me to where I am now at a degree of success that I hope will continue going up. So I can tell traders, don't touch that. That's hot, right? Don't burn yourself there. Watch out for that. It's very satisfying. So I appreciate that, Jack. What triggers am I viewing for potential entries with XLE? So Jack, this is where it gets interesting. And this is where I know my sector secrets folks know we've got a couple different viewpoints in terms of time horizons. I am not interested quite yet for a daily time frame buy. But what we do have on XLE, XOP is a group of stocks with a commodity that fuels these stocks' movement in many ways. Those commodities, natural gas, crude, are still with bullish bias, if not uptrends anymore, but they still have bullish bias. And the weekly time frames are pulling back. So yes, I'm keeping an eye on XLE and XOP specifically for not the daily, my friend, but more so the longer term portfolio position. FCG is interesting because we have some Darvis support in this area. FCG is interesting, and it probably has the easiest headlines to deal with. The headlines in crude are fast, furious, and ridiculous. They really are. The narrative around Natty is a little bit more tangible, and we can monitor it. And it's a singular narrative. It's that Freeport export terminal shutdown. So Natty then maps a little bit more positively, Jack, to daily FCG and daily XOP. So that's where the daily time frame would be interesting. Natty sitting at support, XOP, FCG. FCG is your ETF for natural gas. And then XLE is looking pretty good for and you can take a look at Chevron, Exxon, other weighted names in that sector for longer term time horizon weekly setup. So that's what I'm looking at there. It's really the time horizons that are going to make the difference here. And this is what I love about where the evolution of the sector secrets mastery has gone. It was always designed to be and will always be rooted in daily time frame, trend following, with an emphasis on understanding relative performance with sectors and indices. That's always what it's going to be. That's been my trading for the better part of my career. However, right now the dailies are tricky. So what we've done is we've just evolved that room to become sort of the everything Raghee room, where it's, all right, well, what's happening on the longer term weekly portfolio? There is opportunity on that weekly chart with the structure that we're seeing. And oh yeah, while we're waiting for those, let's day trade. And that, in a nutshell, is what I do. So, this is where it's not just watch list building anymore. It's watch list building always, but it's also what is the time horizon that you feel most comfortable managing right now. And I'd have to say the daily is probably the trickiest. Okay. Thanks for the question, Jack. And that's how I'm handling it. Hey there, Alan. What's the weighting of the Japanese yen in the UUP? It's number 2, and it's a distant second. So no, I would not consider, whether that be DX futures or the UUP, it's not going to be the needle mover that, say, the euro is. And by the way, the pound sterling is even less. So if you're looking for a small move, maybe, but the QE decision, remember, here's the other thing, Alan, the QE decision out of the Bank of Japan, probably the most accommodative central bank in the universe. Remember that if they continue to weaken the yen, that just continues to propel the UUP higher. Right now, we would need a pullback to re-engage the long side. That would include euro, yen, and pound individually in the FXE, FXY, FXB symbols, and then UUP, which is sort of a weighted mishmash of those three. Right? It's an index of currencies. It's not just the dollar to dollar versus, right? So if we get even more messaging from the Bank of Japan, it's just going to weaken the yen and keep this uptrend going. Is it going to be enough if they don't to get a correction? Probably not, because the weighting is really pretty minor. Let me put it this way. The euro is 57 point some percent change weighting within that. And I think the yen is somewhere around 13. It's quite low, probably not enough to be a needle mover. Do I look at, do I look at commitment of traders information? Julian, not that much in passing, but I wouldn't say that I spend a lot of time doing it. It will be something that I'll glance at on a Friday or Sunday, because that information comes out on Friday. It's always looking back, by the way. And remember, the tricky thing is it really only works in commodities because remember, so much of that COT data reflects hedging in the indices or even sometimes the currencies. So I'm not. It's very interesting data. It's related to volume and sizing and contracts. So it's certainly something that I would consider a valuable sub-market sonar type mindset. But I can't say that I would put that above, say, volume analysis and other tools like VWAPs. But I usually have at least once or twice. I've built that habit to look at it, but it's not really a key part of what I do. So thanks for the question. Exxon. Good time to get into Exxon. You know, if you want to fade the area around 85.5, Pablo, perhaps, your zone is really going to stretch down to about 83.5. You've got a neutral market. You've got an oversold stochastic. It could be interesting. But remember, as we get the volatility in crude, which is far more difficult right now to handle, it's not a macro shift, gang. It's certainly a lot of ridiculous, sometimes geopolitical and political headlines. So mostly political right now. Politics within OPEC, politics between the US and OPEC. So I would be very careful because if there is volatility in crude, there's going to be volatility in XLE. And I don't love it. So right now, you know, XLE, Exxon, they're great day trading names. So I'm going to fire up my HPMRs and get to work. And again, gang, if you haven't already, check out the replay of yesterday's webinar. You can catch that over at simplertrading.com/answer hyphen replay. All right. And if you've been wanting to get your hands on the HPMRs right now, and it's the best way that I can describe what the elite package is for the class is you got the class and you pretty much get a year free of the HPMR updates. So, you know, if you're already all in on that, please take advantage of that. That's going to end probably by the 15th of next month, that particular offer. It'd be great if you do it before the 8th so you can join in on the live trading for the elite level. But if you've been saying, Rog, yeah, what's the best way to get my hands on the indicator? Take the elite, get the class, get the 4 days of live trading, and a year of the HPMRs. The full subscription with over 4 dozen symbols comes with it. So just putting it out there because I know I'm going to get emails at the end of July saying, hey, Rog, is that still available? And at that point, the office is going to have pulled it, and that would kill me. So for those of you that are already all in on HPMRs, those packs are going to continue to expand. We're going to continue to update the watch list on those packs. So I am super stoked about what's coming. Gang, be good to each other. I'll see you tomorrow. Same time, same station.